we have an ecosystem that is very, very differentiated from every other business in North America. There's big talk about federal legalization, and I keep saying that we don't need federal legalization. It's amazing if it happens. We get an exponential THC growth opportunity, but we are doing amazing today.
Welcome to Seeking Alpha's CEO interviews, informed conversations with the best and brightest CEOs in the publicly traded markets. Quality of leadership is a decisive factor in stock performance. Our show provides intimate and in-depth investing discussions with industry leaders across all sectors of the marketplace. We publish excerpts on social media platforms and the full conversations on seekingalpha.com or on our highly rated Seeking Alpha mobile app under CEO interviews.
Welcome back to Seeking Alpha. I'm Josh Kincaid, capital markets analyst, and today interviewing CEOs. My guest today is Raj Grover, president and CEO of HITI. Raj, thanks for being with us at CEO interviews.
Thank you for having me, Josh.
I appreciate it. So normally I don't really go into backgrounds, but I think that yours is somewhat unique. And so I kind of wanted to start there. Cannabis is very new, nascent industry, and you kind of started this when you were 22. One of your first companies, you kind of established yourself as one of Canada's foremost business strategists, deal makers. So you started from a small store, you had 2 employees, and that was a decade ago, which, in the cannabis world is like a century. Since then, you've multiplied your growth to become one of Canada's largest cannabis retailers. I'm curious about that journey and what the advantages are, having started young while the industry was really young itself. The average CEO tenure was only 8 years back in 2016, and now it's less than 7. Do you find that was an advantage for you starting so young?
Yeah, absolutely. My background is I'm a fortunate person, Josh. I was raised in a business family. My grandfather, my father, my uncle, they're all traders. So, I saw business happening live firsthand growing up, when my dad used to speak to North American customers and European customers. And then, he would do the postmortem of the call. And I was just 13, 14 years old at that time. So, I've always got business experience in my house. And that's also triggered me or driven me towards learning more and getting more and more excited about business. So I was fortunate enough to start business at an early age. I started my first business I believe when I was 22 years old, and that was import of fashion accessories from Southeast Asia. So Indonesia, China, India, because that's what my family did. They were just in the grocery line, and I got into the fashion line. And then I opened up a convenience store. I opened up a restaurant. And I was a big news buff. So, in 2008, I believe, I moved to Calgary from Toronto. I sold all of the businesses in Ontario and started this store called Smoker's Corner, which was just 500 square feet. And prior to that, it was really a fortunate accident how I got into the cannabis industry. I was on a regular business trip to India sourcing body jewelry, and I stumbled across consumption accessories. And, I was very well aware of the margins that were involved in the opportunity. So I bought $10,000 worth of cannabis accessories, shipped them to Canada. By the time I got back, the stuff was already there. And I was able to move that within a week for a nice profit. So that's what got me into the cannabis industry. And, having all of that experience of having done so many businesses and always have been an entrepreneur, and my family is all entrepreneurial. So, from that perspective, I've got very lucky and got a lot of business experience under my belt. And, that was one of the other motivations for me was I saw the difference. I said, I've been running companies from a very young age. And when I decided to take the company public and I started making trips to the Bay Street from here in Alberta, I realized a lot of the CEOs and then people that I was meeting, a lot of the founders, CEOs were from the capital markets or from different industries, but they were not, they didn't have that entrepreneurial edge. And, I saw that as being an operator in the industry. I already had the same customer that I was catering to because of consumption accessories. That these are the same mature, heavy users of THC. So, I had a path ahead. I understood my customer well. I started early, and then I started devising a strategy to take the company public, and it's worked out really well.
So you have the managerial experience. Being an entrepreneur is one thing, but then actually managing people is another. So when you started the potch or the accessory shop with 2 employees in 2009, growing it into this large cannabis retailer, I'm curious, where along the lines did you go and learn how to manage all of these people? Right now, your business has about 1,000 team members. You have business verticals across North America and Europe. As of February, you operated 109 retail locations. That's across Ontario and Alberta, Manitoba, Saskatchewan. And it looks like you're from the third annual report on Business Magazine's ranking as one of Canada's top growing companies in 2021. What is the secret, Raj, behind that in dealing with the industry's high turnover rate that was exacerbated by the Great Resignation?
So again, a lot of business experience, comes in handy. A lot of life experience comes in handy. I've always been an entrepreneur at heart. And I know one thing, Josh, when you're managing your business, you don't only have to be strategic with, where you're going with your business and what's the next step that you're going to take, but you also have to be a strategic leader right from the get-go. And, managing people is no easy task, but I know that I always say you could have the best ideas in the world, but if you don't have the best team executing it, those ideas go nowhere. And I've always been very, mindful of this fact. So I've always groomed my people, with an open heart and with a clear vision of where we are going. And they bought into the vision and they bought into the strategy, and I continue doing that until today. Because you can understand, Josh, today we're over 1,100 people, and everyone comes from a different sphere. People have their own agendas and their own lives and where they want to go in their career path. So it's not always easy to manage all of the different people in all of these different geographies, but that is one of my core skills. Actually, I keep my team together. Team building is absolutely the most critical part of my strategy. And, I always give them a pat on the back when we are winning. And we have this winning culture in High Tide, and grooming your people the right way and being strategic about it from the get-go is extremely important. So it's not just business strategy, it's also people strategy. And it's worked out really well for me so far.
Talk to me a little bit about the sales recently. 420 is the largest sales date, generally speaking, but you've recently also implemented some discount sales club. And I'm curious, during the pandemic, a lot of retailers had to initiate similar discounts in order to entice people to come in. They were utilizing delivery and curbside pickup, but it was really about these weekly, or in some cases daily sales. Did that impact your locations on 420? In other words, were the sales enticing enough to get people to come out on one of the craziest sales days of the year, or did people stay at home and wait for their normal sales day of the week?
So our discount club model that we launched in October 2021, it is the first of its kind in North America in cannabis. There's no company that has executed it in the same way. Now, we've tailored this concept to leverage our entire ecosystem. And we are the manufacturers and designers, of almost majority of the consumption accessories we sell. I would say north of 75 to 80%. So I understand my ecosystem really well. If I make these accessories and I can pass these deep discounts straight to my customers, well, none of my other competitors are able to do so. We shut up our wholesale. Well, first of all, we were having supply chain issues just like everybody else. So, we strategized and we said, let's just shut down our wholesale and give these accessories, provide these accessories exclusively to our club members. Because we are the only ones that have this unique edge, and then leverage our ecosystem. We have these CBD brands, bring them into Canada, further leverage our ecosystem. So we're not just competing on price, although we do have the most unbeatable prices in the country. No one touches us on our prices, and they can't, because I am leveraging my consolidated gross margins. Consolidated, we are still above 32, 33% gross margins. And this helps me fight hard in Canada, gain market share, put up our club concept, which is extremely well received. We are at 120 stores today. Just like you said, in February, we were around 113 stores. Well, now we've reached the 120 store mark. We have another 6 stores that are meant to close, any time now. So we are rising very, very quickly. And that's because of our thoughtful strategy that we are not just fighting on price. Anyone can compete on price, but what happens if everybody just competed on price? Well, first of all, the independents are unable to do that. It's unfortunate, they're 80% of the businesses in Canada today are independents, 20% are chains. I see this mix turning upside down. I've been saying it for a while, and I've been getting weekly calls from the smaller chains and the independents to, they want to sell their business, and rightfully so, because it's going to be survival of the fittest in Canada. But above and beyond, we have an ecosystem that is very, very differentiated from every other business in North America. There's big talk about federal legalization, and I keep saying that we don't need federal legalization. It's amazing if it happens. We get an exponential THC growth opportunity, but we are doing amazing today. Just look at our numbers. We grew 34% sequentially to $72.5 million in revenue in our Q1. And I can't wait to release my Q2 results because, we are well on our way to continue to execute on our strategy. So our 420 sales, which is always a big event, although, it's a big day, we've been selling 420 prices we've been offering 420 prices every day in our retail stores, not just the 420. And that was a really nice day for us, as usual.
Mm-hmm. Also, e-commerce. You've been doing e-commerce for a long time, and that's been apparently working for you. Distribution is essential in the industry as well, getting products to the market and seen so the customers can actually buy it. What about direct-to-consumer sales? There's a lot of discussion on the West Coast, especially California, with sort of this gray area of direct-to-consumer sales, and that's kind of going to be a big issue for a lot of these retailers that are spending hundreds of millions of dollars on this exclusivity in limited license states. For you and where you're at, you're utilizing distribution in e-commerce, but what about that advantage of direct-to-consumer sales? Is that something that you're able to do, or are you going to try to take advantage of that if or when it's feasible?
Direct-to-consumer sales is a huge part of our strategy. Just last year alone, we acquired 6 e-commerce platforms. These are asset-light businesses, and we increased our outside of Canada run rate from just 10 million to today over $85 million. And again, part of the strategy was we make these accessories. We make a lot of these consumption accessories, almost 75 to 80% of them. So if we are making these accessories and we can put it in the hands of the consumer directly, cutting out all the middlemen, well, of course, we have this direct relationship with the customer then, and that customer is not going to leave us because we can pass these deep discounts to our customers. So, our strategy is a bit differentiated. We are the largest retailer in the country here in Canada with 120 brick and mortar locations, but we've supplemented that with another $85 million in international revenue. And I've taken a bit of a pause at it because there's no shortage of deals that I can do, but we do high quality deals. We take our time to do the right deals. All of my deals have been extremely accretive. You can look any of them up, and we are still taking a break because now I know, we've got a concept that works. We know Canada is loving it, and we're going to put up to 200 stores in Canada, and our e-commerce businesses are rising. Our margins are holding steady because of our e-commerce businesses. So we've created this diversified, differentiated strategy. We're not just a simple plain brick and mortar retailer. We have this direct to consumer relationship, which I want to double down on. And, I've been thinning down on our wholesale business, one, because of necessity, because of all the supply chain challenges. Second, direct to consumer margins, no one can touch it. So I want to continue to focus on that side of the business.
For now, you said you're kind of taking a pause on M&As, but in the past, it's kind of been an area of growth for you. And like you mentioned, some of your revenue came from that. You had acquisitions in one of the series of recent steps that you'd taken to expand that footprint in the US, dominate e-commerce marketplace for consumption accessories. In the last quarter of 2021, you made several strategically vital acquisitions. There was a recent acquisition of Budroom and its technology of Fast Tender, said to enhance customer experience by proactively sharing sales items and making informed recommendations based on previous purchases and items that are in the cart. You had said that, quote, we continue to execute on opportunities to acquire established stores with good fundamentals to attract multiples. Once these acquisitions have closed, we will have surpassed the 120 store threshold and will be well on our way to achieving the 150 store milestone by the end of the calendar year. When you were, Raj, looking at all of these acquisitions, what were you looking out for when making those potential M&As?
Well, let me clarify first, Josh, that we've not taken a pause on our M&A strategy. We've taken our pause on the international M&A strategy for a bit because the deal flow that we have in Canada right now on the brick and mortar side, we're picking these companies up at extremely accretive multiples. All of the deals, we purchased 8 stores in the last couple of months. And all of these stores, we paid 3.5 times multiple of EBITDA. And, I still have a pipeline of deals that we are going to continue to announce. So we've got a lot of deal flow. And what we are doing in the meanwhile, if we can adjust and do a CBD deal or, buy an accessory brand or continue brick and mortar stores in Canada. So our M&A strategy is not, one directional only, that if I'm buying e-commerce platforms, well, that's what I have to do. We purchased it. We've added the right amount of revenue. We've added, we've increased our consolidated gross margins. We now have exposure to CBD, consumption accessories, and brick and mortar retail. It doesn't get better than that. So we're going to continue doing that. But, I'm very, very opportunistic in terms of where the deal flow is and where the accretive multiples are. I hate overpaying for deals. That's not how you create value for shareholders. And we're going to continue doing more deals. So we've not taken a pause on overall M&A. We're just picky and being very choosy about what type of M&A we want to do. To answer your question on, how do you look at these companies and how do you look at buying them? So Budroom acquisition was not only is it a great store by itself. I believe it was doing $2.5 million in revenue with around $700,000 or $800,000 in EBITDA. And it came with the Fastender technology. Now, Fastender technology is a game changer. We get to install these beautiful kiosks in our stores, which provide us unique upselling opportunities. We have data that supports that 7 out of 10 users want to use these kiosks. And this reduces pressures on our budtenders, that they're not under pressure. Now, we're a value retailer, value-focused retailer. So you can imagine we're moving a lot of tonnage in cannabis. So budtenders do not get, they don't have unlimited time in a day to cater to every single person with that same affection and same care and same knowledge, just because of the amount of volume of sales that we have. So these Fastender kiosks are changing the game for us. We only have it installed in 5 stores. We have another 32 machines that showed up. So we're installing another 15 stores. But again, it was a fantastic acquisition to do. And I'm always looking for what is the next creative way to fortify our ecosystem even more, differentiate our retail concept from our competitors even more, to make Canna Cabana the only go-to brand. If a Canna Cabana is around you, you shouldn't be thinking about any other cannabis shop to go to, because we've got you covered. You like using technology, we've got the Fastender kiosk. You love accessories, we've got the lowest prices in the country, some of the most cutting-edge accessories. You're a regular user of cannabis, we've got the largest variety at unbeatable prices. So, from that perspective, we're going to continue doing more and more acquisitions, but you're going to hear that more on the brick and mortar front.
You had mentioned that legalization in the US wouldn't be a huge deal for you, but I'm wondering just if it would be exciting because of the opportunities to grab more market share in the US and expand your foothold in the US. Right now, you're on the NASDAQ under ticker symbol HITI. You have been included in several ETFs, cannabis growth ETFs, and you would be able to have more exposure, maybe being a big board exchange in the US if federal legalization were to occur. So I'm wondering what that would mean to investors, if that's something that you're anticipating or looking at to try and get into the US, as well as trying to get onto American Stock Exchange, like the big board exchange.
So we're already on the NASDAQ. It's our MSO peers that are not. And look, the federal legalization, the opportunity in the US, it is a huge opportunity for HITI. If we can become the largest retailer in Canada, and there's a few strong groups with a lot of capital behind them, but we've trumped absolutely everybody in Canada, and our operational track record is for everybody to see. So when that US opportunity happens, you can bet on it, Josh, that we will be moving full steam ahead to open up brick and mortar shops in the US and continue to advance our M&A, our e-commerce portfolio in the US as well. But our business is exciting today. There's not one other cannabis ecosystem, I can ask you that you can name that has exposure to CBD, to accessories, to brick and mortar. There's M&A going on all 3 verticals. We're growing our company, growing our revenues exponentially. Even the MSOs have started slowing down. That is not the case with HITI. We grew 34% sequentially last quarter. We grew 118% fiscal 2021. And our growth is going to continue to be amazing. And we operate in Canada and about $85 million of international revenue. So our business is already exciting, but when US federal legalization takes place, HITI will be one of the major players in the US.
Do you have any anticipation or any desire to be vertically integrated and to grab a part of the grow? There seems to be a lot of discounts with Aurora and Canopy selling huge swaths of greenhouses for really cheap. And you're talking about accretive deals and looking at opportunities. And it seems like a lot of the early entrants in the US as well as Canada are discounting a lot of assets. I would call them distressed assets. You can't be a plant touching company, still be on the NASDAQ in the US, but you can in Canada. Is that something that you are looking at as well, if the valuations are good enough, or are you just going to stick with retail?
So we've always been a retail-focused company. We've always been downstream, but you have to evolve with the evolving times and the changing times, and your business has to evolve. And Ontario, for example, it makes it very, very tough for a producer to own retail stores, and it's half the market in Canada, or practically half the market in Canada. And we took this strategic decision that we are not going to grow in Canada because retail by itself can be supported in Canada without the growing practices. But when we get to the US, a lot of the states are already vertically integrated. So I am totally up for that challenge. Good thing that we don't have to get into that part today. Now, if rules and regulations change in Canada, which they always can, and Ontario in particular changes their position on growers owning, they can own 100% in retail, we are definitely going to consider the vertical integration strategy. And it's going to happen at some point when we enter the United States. We already have a lot of our brands in the accessory space, in the CBD space, that we can now offer in our retail stores. The last thing is the white label opportunity that we are introducing here in Canada. So we're already getting into that. We have our gummies and shatter that's supposed to hit our shelves anytime. But when we get to the US, we're definitely going to consider the vertical integration strategy depending on the states that we operate on.
What would you say to skeptical investors who would say that your 34% quarterly increase and annual year-over-year increase of 118% was a result of the pandemic, that people just went out and bought more products and didn't really have anything to do with high tide? You have any response to the success that you've had and the growth that you've had, and the difference between other retailers that were able to take advantage of just the increase in volume from the pandemic versus establishing the increase in the distribution, the foothold, and the market share that you've had?
Well, Josh, I would say it's absolutely everything to do with our strategy and how we've managed our business and how we run our operations. It's got nothing to do with the pandemic. All companies had an equal advantage or a disadvantage during the pandemic. And the results are for everybody to see. Pick any one of our peers in Canada and compare their results. Pick any of the midstream companies, pick any of the growers in Canada, and compare their results to us. And you can see our growth, you can see our trajectory. We've gone and done M&A at the right places at the right time when needed. We've taken a pause when needed. Today, you look at our operational execution, it's at an all-time high, and yet my stock is at a 52-week low. It hurts to even see that, but that's not because of our strategy or our execution. That's guilty. We're guilty by association with the sector, with the industry, but the momentum will change. But, I can't say that we've got lucky because of the pandemic. Then any other company had the same advantage or disadvantage. We've got lucky. We are executing because of our strategy. We come up with a strategy and we go all guns blazing on it, and we deliver results.
Last question about legalization, I promise. Will legalization finally be the thing that decouples the industry so that companies like you are able to trade independently of the sector that seems to move in momentum with news? 280E is going to look really, really good for any company who can just write off a lot of expenses like labor, but also your stock will be able to move independently. Maybe to move on technicals only. Maybe it won't matter about fundamentals, but at least it can move independently. Is it going to take legalization to do that?
Look, I hope not. But the biggest overhang on every cannabis stock today is federal legalization. And I get it. We're all part of the same industry. But then again, I would like the investors to just take a look at what our portfolio is. Where are we building our portfolio? There's a lot of international opportunities coming up. Germany is gearing up and could be ahead of the United States to federally legalize marijuana. We've entered the UK market through Blessed CBD. And then we organically entered the German market through Blessed CBD. So we are looking at different markets, not just the United States, but unfortunately, again, it's the whole industry. It's the 280 conversation. It's the safe banking conversation. It's the full federal legalization conversation. But at some point, these things will change. And I hope, when federal legalization happens, absolutely, companies like ourselves that are executing, that are performing, that are delivering results quarter after quarter, I don't think we will be judged in the same bucket as we are today.
Mm-hmm. The U.S. has a huge stronghold and grip on the opinions of many companies, and I feel like CBD is the gateway to expressing a different opinion around cannabinoids. So as you kind of have moved into CBD, there's other cannabinoids like CBG or CBN. I think in Europe, CBL is kind of taking off. That's synthesized, or whatever, different topic for a different podcast. But there is this expansion in cannabinoids, whether it's hemp or cannabis. Cannabis alone is slated to be a $26 billion industry this year and $45 billion by 2025. And so with that, how are you trying to pivot to stay relevant when there's so much moving? It's such a dynamic industry that's constantly moving. How are you going to be a going concern moving forward?
When you have exposure to all three segments of cannabis, which is THC through our brick and mortar stores, accessories, which we've been doing over a decade, we're really good at it. And now CBD, more recently, we have close to over $45-15 million in revenue being generated just out of our CBD business. And, Josh, you pointed out there's new cannabinoids coming up. Their popularity is growing, which is CBG, CBN, CBD. We acquired a company called New Leaf that has been a leader in cannabinoid science, since 2014. And they have this proprietary soft gel, vegan soft gel blend, which is a 1-to-1 ratio of CBC, CBD, CBG, and CBN. And there's not many companies that have that today. So we're at the forefront of multi-cannabinoid formulations and cutting-edge formulations. And we're entering new markets to deliver these formulations to customers that are just getting used to CBD. So again, I'd like to remind your listeners, investors, that High Tide is ahead of that curve. We keep in mind that 20-25% of the world's population maybe wants to get high and enjoy the recreational benefits or intoxicational effects of THC. 100% of the world's population wants to get healthy. And you get that with CBD, and we have our eyes on CBD as well. And then you need a consumption accessory of some sort, whether it's a $2 rolling paper, or it's a $700 volcano vaporizer. You need something to consume your cannabis. We touch all of that, and we've been doing it for a while. And this is where having all of this experience for over a decade is coming in handy today, and having running all of these businesses for over a decade is really coming handy today, where I don't think that we're in the same bucket or using the same strategy as a ton of other companies. Our strategy is very differentiated, which gives us access to all three categories of cannabis.
We talked a lot, Raj, about High Tide, Canadian marketplace, international expansion. Anything else you want to cover at this point?
I think you covered a lot of points, but again, if I could just remind your listeners that we have one of the most unique and diversified ecosystem in cannabis. It's a one-of-a-kind opportunity. You can look around in Canada, in US, and internationally. You can look at our growth rates, how we've grown exponentially. We've been growing over 100% for many years now. And at some point, that will, the light will shine on High Tide, and keep an eye on our forthcoming quarterly results. We are working very hard. Our team is doing a great job. I want to give a big kudos to the entire High Tide team for getting us here. But we're only just getting started. I've been saying this for the last couple of years. There's a tremendous cannabis opportunity in front of us, and we're capitalizing it on today, and we're going to continue to capitalize on it.
I think with that, we're going to have to wrap this one up. So I want to thank my guest, Raj Grover, President and CEO of High Tide. Appreciate you being on CEO Interviews.
Thank you very much for having me, Josh. Appreciate it.
I appreciate it. I'm Josh Kincaid. This has been another CEO Interviews by Seeking Alpha. Don't forget to like, share, and subscribe. Thanks.